A very good evening to you. Thank you very much for watching Business Insight this particular evening. We'd like to get into our interactive session. We have Ronald Omukhulu. He is an investment analyst at Saiton Investments. Tonight we want to discuss matters the 2021 economy for Kenya. Remember that last year the economy was hardly hit by the COVID-19 pandemic, from a 6% growth projection at the start of the year and just closing at 0.6% towards the end of the year, according to the Treasury. We now want to see what will be the drivers of the economic growth post-pandemic recovery and how Kenya is going to wade through the moments. Thank you very much, Rodney, for joining us here.
It's always a pleasure.
Karibu sana. Now, of course, 0.6%, that is what Treasury said we closed at. How is 2021 looking now?
I'd say 0.6 is a really close figure, given that even the World Bank is anticipating a growth of around 1%. And this is just mostly driven by the declines or lockdown restrictions that we've had that have affected various businesses across the board. So going into 2021, we are looking at roughly 4.7 according to the World Bank, which is a slight recovery, but we're coming from a year where we've seen contractions as low as 5.7, which are the lowest we've ever been as a country.
And in your view, what are the drivers of this growth, that particular percentage that you've mentioned?
I'd say the major factors that have affected the country, first of all being the pandemic, where a lot of businesses have closed down. Some aren't able to recover from the shocks they've seen for the better part of 2020. So going forward, I'd say the major sectors that will determine growth for the year are agriculture, where we look at rainfall. We normally have a bit of a drought at the beginning of the year, so we are keen to see how this will affect the general outlook for the year. But that's a significant portion of it. We look at also fuel prices, where transport is a major factor. Other than that, also how the government is going to handle this whole pandemic situation going forward. Let's
just stick with the agriculture question there. Of course, the year has not started on quite a new swamp to the government. How is that going to pan out for the agriculture sector?
It will affect production significantly, I'd say, given our experience with the first wave that we saw early 2020. But given the nature also of the locusts, it's hard to really tell the effect on the economy. But given the way the year has been, for agriculture specifically, we haven't been that bad off because we've had favorable weather conditions for the better part of, I'd say, the second half of 2020. So we are a bit optimistic coming into the new year, but we are also waiting to see how this will turn out.
Considering the place that agriculture holds in Kenya's economy, the government said that the locusts just consumed about 7% of produce. 7% of agricultural produce is not a small bit of it. And of course that impacted the economy for 2020. That is last year. This particular year, we are not sure how the numbers will look. And this goes for the farmers and you know, the rising input costs that they're already complaining about. How is this going to impact them?
Ultimately, for us as a country, or I'd say for farmers, it's just preparedness, because this is something they're anticipating to come during the first part of this year. And the effects aren't there yet. I'd say what we had in 2020 was one of the worst cases. But going forward, I believe the government should take a more proactive approach in terms of just enabling farmers to, I'd say, withstand some of these shocks, such that even if it's looking at a recovery, we're able to come out of it fast and at I'd say a better position than where we were initially.
Right. Now talking about how the government is going to deal with the pandemic, the year has started, the students are back to school. Remember that last year when the schools were closed, there's a whole economy around the education sector, from the books industry to even suppliers to the schools, you know, the uniforms, the food. It's quite a big part of the economy. Now that the schools have reopened, what do you foresee?
It's actually good, I'd say, because a number of our teachers are still employees of the government,
right.
And all these schools employ people. So it helps in the sense that for households, they'll be able to get that additional income because of the resumption of education in the whole country. So it's a positive in the sense that it will help increase production just to drive the recovery approach that the country is taking. So the resumption of the education sector is good in the sense that it will help bring in more money into the economy, but also the virus is still here, so how schools will manage this situation is also a key thing to note.
And of course the suppliers, not all students are going back to school, that's for sure, which is really a sad situation.
True.
And the suppliers now have a new market for their goods, yeah?
Definitely. So in the sense that when you talk about education as a sector, you have various stakeholders. As you've mentioned, the business suppliers, textbooks, those who provide the facilities, that is. Teachers, I think, are one of the major parts of it because I'd say staff costs are a big element in education, so that extra income will help. And generally, as an economy, we tend to rely a lot on education given the size of our population. So as an outlook, education will be a big or a major driver of the economy going forward. As
these teachers get back to employment, those who maybe had paused employment, especially for the private schools, and of course the government now continuing with the public school teachers, that is definitely going to put more money in people's pockets, as you've said.
Exactly.
But there's also the issue of the taxes. The tax relief measures are now over and done with. We are back to the old regime. How is this going to impact people's pockets eventually, now across the economy, not just the education sector?
So I'd say it's definitely a pinch to quite a number of low-income earners because there are some of the major, I'd say that is part of the population that was being catered to when these measures came into place. So I'd say it's a good move by the government in the sense that it will help boost its revenue collections for this year, or the current fiscal year, that is. But for households, I think it's a hard pill to swallow in a way, but it's something we have to definitely take up if we are willing to come out of this situation and hope for recovery.
Of course, one side has to give eventually, because when these tax measures were introduced, the revenue collection went down. It was really bad. We are still in that that financial year, and the targets do not seem, even with the tax relief measures being lifted now, the government, or rather KRA, might not meet its targets. What do you foresee on that front?
Well, I'd say for the government as a whole, it's been a balancing act. In the sense that you have the economy to support on one side, and on the other, you still need to generate revenues. You have a high level of debts.
Right.
So trying to balance these two has become an uphill task. And when you look at revenue collections, for them to be able to improve on revenue collections, they need to get that from somewhere. If businesses are suffering because of COVID, they'll end up closing down, so you also need to support these businesses.
Yes.
So for the government, it's been a balancing act, and as to whether they'll meet the targets, that's highly unlikely, given that we're already behind by close to 100 billion, that is, for the current fiscal year, compared to what we had in 2019. So I'd say for the government, it would be a situation where they have to choose. Are they going to support businesses in the sense that they'll give them incentives, or try and meet their targets when you look at revenue collection? So for us, it's just to wait and see, based on their discussions and how the outlook is for the whole country, then they'll give us an ideal way forward. That is.
Quite a tricky balance to meet, really, at this point in time, considering all the parameters that there are to look at. The horticulture exporters were saying that there's a new levy of 0.25% on all their exports. They were saying that as much as it will give the government about 350 million shillings in a year, every year starting this year, 40% of the export farms will close down. So, I mean, achieving that balance is quite a tricky bit, right?
True. What I can say with regards to that also, I think government being who they are, they have better options, I'd say, in the sense that you find that government ends up spending quite a lot of money on various projects that don't earn quite a significant amount of return. So whereas you'd see, as opposed to the government sort of postponing some projects to focus on maybe like supporting the horticultural industry, they opt to now tax the horticultural industry and still continue with the huge capital expenditure that they have. So I'd say that's one of the major concerns that we have, in the sense that for the government, in our view, we'd recommend them cutting down on capital expenditures just to support the economy, the various sectors that are being affected by the virus. During this period of uncertainty, then the whole capital agenda can be pushed once we're out of the woods.
Let's talk about the banking sector. The Kenya Bankers Association, when they were giving their outlook for the year, it was positive, but they said that they cautioned that most borrowers will probably default on their loans, or there'll be a high non-performing loans, as well as SMEs also not being able to, you know, access credit.
Correct.
How do you see this panning out now?
I'd say the outlook is quite accurate, given the experience we've had for 2020. And I'd say this is just like a spillover effect from what we had from the virus, where you have businesses that have been closed for 9 months because of the virus. They're coming back up, they have standing loans. During the COVID period, they had exemptions, you had extensions, but these are now, they've lapsed. So you still have to own up to your debt payments, and you don't have that revenue stream. So they anticipate, I'd say, huge defaults this 2021, but also they're optimistic in the sense that there's a recovery because of now easing restrictions and things like that. So I'd say it's also a wait and see approach, in the sense that you don't know what might actually happen. The virus is still here. So for us, it's just to be optimistic. We anticipate definitely huge defaults, but businesses are still coming up, so hopefully the year will be a good year for banking as a sector.
For banking as a sector, that is for people who already have loans. For those who are going for loans now, there's the other issue. They say that most borrowers will probably be categorized as high risk because of the reduced, say, output from these businesses. How do you see that working out now for the businesses, especially the SME sector?
I'd say this started way back since the removal of the rate cap, because we had a situation where there was a cap, so banks were saying we can't price credit well in the market. After that was removed, the situation didn't change as much. So in a sense, banks generally perceive the current market to be quite high risk. So for people who are going for new loans, it will definitely be an uphill task to get these loans, given also the performance of, or I'd say the private sector credit growth in the country, which has somewhat been mixed, where it's currently at regions of 7 to 8%, which are quite low, given the highs that we've seen over the past 5 years. So in terms of an economy, when you're going for the credit to banks currently, it will definitely be a problem, given the whole outlook in the economy, where businesses are still suffering under the pressures from the virus. Yeah. Most
of our exports, Europe is a very big export market for Kenyan goods. And there's a new variant, of course, of COVID-19 that has led to some reintroduction of lockdowns, of course, with the UK taking some serious lockdown just the other day. What do you foresee this is going to impact on the Kenyan economy?
It will definitely affect the Kenyan economy, given these are major destinations for our export goods. And this normally helps the country in the sense that we earn foreign exchange from it. Currently, our foreign exchange reserves have taken a hit, given what we had with COVID, where we've seen the exchange rate go to highs of around 111.6. That is as of 15th December. That's like 3 weeks ago. So in terms of our foreign exchange situation, will be significantly affected by the restrictions we're seeing now globally, in the sense that we won't be able to find good destinations and good prices for our products as a country. So ultimately, it poses as a major point of concern, in the sense that as a country, getting our goods out will be a problem. But also considering the experience we've had with COVID back in March, lockdown restrictions will be there definitely, but I'd say not as hard as they were in the initial stages. So we've sort of learnt from the first scenario. So it will definitely have pressure, but I'd say not as much as what we saw initially.
Not as much as what we saw. Of course, one of the problems that came with the COVID, the first wave of it, apart from the lockdowns affecting human travel or just travelers going around the world, there was the issue of cargo space.
True.
Do you think that is going to be impacted now, or is the aviation industry, set to maneuver these times?
Like I said, we've sort of learned from that first experience. So even with restrictions, I believe organizations have found ways of coping, where some people work from home, some now opt to come to the office, sanitize, do all those things. So I'd say for a number of these organizations, as opposed to lockdown is here, close everything, it will be lockdown is here, how do we move around this situation? So in a way, as opposed to stop, let's wait and see what the government is doing, it will be lockdown is here, let's find a way of moving with this lockdown in place.
And for Kenya, of course right now the variant has not come to Kenya yet, or has not yet been reported in Kenya.
True.
In the event that it comes to Kenya, because we have not really closed our airspace, what do you foresee would happen in case of maybe other restrictions being introduced, or going back to the previous restrictions we had?
It's definitely a matter of concern, but given the effects the economy has had so far, it's highly unlikely that the government will add, I'd say, stricter restrictions. Maybe the curfew will still be maintained. Current regulations might continue, but the introduction of fresh restrictions, I don't think will be imminent, just given the fact that the economy has suffered quite a bit from the first restrictions that we had early March 2020.
Right, so the best case scenario is wear your mask and, continue to sanitize.
Yes.
All right. When we talk about the structures that have had to change because of COVID-19. You've mentioned the working from home issue. It has led to quite some growth in the digital economy. Some little known, websites or apps have just become worldwide phenomena now, or rather household names,
Correct.
So moving into 2021, what do you foresee for this trend? Are people going to continue with the working from home arrangement, or will some people get back to work?
I believe it's actually a number of companies have learned from this experience, in the sense that it's actually cheaper to work from home. You're not paying high electricity bills in offices. Some offices have closed branches, scaled down, because now you're having fewer people coming to the office. Other companies have realized you can get work done with people working remotely in the house, and things still move. So I'd say some organizations will take that actual move and move to working remotely permanently, and it will help them in the sense that they'll cut costs and ultimately be able to boost their margins. So for the digital industry, I'd say it's a good move. It sort of nudged people into it, where guys who were a bit pessimistic as opposed to how this would work are more willing, I'd say, to go for it. Yeah.
Right. Let's now talk about the U.S. presidency that is currently, transitioning to a Biden presidency.
True.
This is supposed to happen by the 20th of January. The uncertainty around it, or maybe the Republican side being very loud about the transition. What do you is that going to impact Kenya's economy in any way?
It does, in a sense, but with the factors that we're looking at currently, I'd say COVID is bigger than the US election. So in a way, as much as the country might be affected by the outcome of what's happening in the States, it might not be as significant, given that we are still also trying to fight with what we have currently as a country. We have high levels of debt, we have BBI politics still in the picture. So the outcome might not affect the country as much, though our output or our relationships with the States will definitely have a shift in a way.
A shift in a way. And talking about relationships, there's the US-China trade war. It's still ongoing. Some 5G wars have already begun with China now. What do you think this is going to do now for the global economy?
I'd say based on the experience we've had in 2020, where these factors were still at play, I'd say the pandemic has taken center stage and has sort of cooled down some of these, the effects of these wars, be it the US, China, and 5G. So currently, I'd say for the whole world, in a way, the talk is the virus is here, vaccines are coming, there's a new strain in the EU. So they're still imminent, but the focus has been diverted in a way. So the effects won't be as much, given that markets won't respond as much to these I'd say, relationship issues for the time being. But as the pandemic slows down or tones down, I think this is something that will definitely be an area of concern.
And as you've said, the biggest issue really on the table is the COVID-19, and with the introduction of vaccines across the world, and hopefully for Africa as soon as possible. Do you think this is the key to recovery?
Yes. Ultimately, getting a cure for the pandemic is the best case scenario for us, where we are looking at a situation where we won't have to wear masks everywhere. Social distancing will be a thing of the past. Businesses will be back to normal, where your hotel that can hold 100 holds 100 as opposed to 40 with social distancing. So I'd say getting a cure for the virus, us going back to status quo will be the best situation for us. And the vaccine and the end of the virus, I think, is our best bet.
Right. So as we come to a close of this conversation, in a nutshell, what do you foresee for Kenya's economy in 2020?
2020 has been a hard year.
No, sorry,
we'll see
2021.
21.
Yes.
So 21 is going to be tough since we are coming from 2020. There'll definitely be a recovery, but at a slow pace, given that the virus is still here. Vaccines are not yet in the country. So I'd say the general outlook will be a bit more pessimistic, but we're still moving towards a recovery. So we are optimistic on the outlook for the year, but growth we expect to kick in full force 2022.
2022,
Hopefully.
full force. Thank you very much, Rodney, for speaking with us.
Always a pleasure.
Karibu sana. That was Rodney Omukhulu. He is an investment analyst at Saiton Investments. We have been talking about the economy of 2021, what needs to be done to ensure that we wade through the year, as well as just the sectors that are going to support this particular Kenya's economy. We have talked about matters agriculture, as well as a slowdown in, say, access to credit from the banking sector, but the outlook still remains positive. There shall be recovery this year and probably kick into a very serious recovery in 2022.